everyone. Thank you for tuning in. Let's start today's topics. Telecoms operators like Deutsche Telekom, DT, Orange, Aura, Telefonica, TF, and Telecom Italia, TIT, have lobbied for 2 decades for us tech giants Alphabet's, Google, Apple, AAPL, Meta, Netflix, NFLX, Amazon, AMZN, and Microsoft, MSFT, to contribute to 5G and broadband rollout. Telecoms providers' arguments centers around the expansion of the metaverse, shared virtual worlds accessible via the internet, will strain network capacity and that these tech giants should contribute to the billions of euros in infrastructure costs. However, Meta has strongly criticized this move, saying this wouldn't solve their financial problems and ignores tech companies' hefty investments. Meta claims the development of the metaverse will not require telecom operators to grow capital expenditures for greater network investment, and that official figures suggest that big tech companies should contribute to the gap. It looks like European telecom operators are trying to shift the blame onto tech giants, while ignoring the fact they have not invested in network infrastructure sufficiently. Ford Motor recently shifted its business model from traditional car operations to a transition to EVs with its Model E segment. The Model E segment reported a loss of about $2.1 billion in 2022 on sales of $5.3 billion, having shipped around 96,000 units. Rivian Automotive, an electric vehicle startup, reported an operating loss of about $6.9 billion from $1.7 billion in sales in 2022 for about 20,000 units shipped. Ford's total spending for Model E was reported as $7.4 billion, while Rivian had spent $8.6 billion. Wall Street analysts suggest that Rivian will need to reduce costs and bring in an activist investor in order to improve its performance. Ford pivots to EVs while Rivian struggles to remain afloat, a tale as old as time. Tesla recently announced a new tax credit program that would allow eligible U.S. buyers of its Model Y and 3 cars to get a $7,500 federal tax credit for the past 3 months. Tesla has informed their employees that the Internal Revenue Service will soon release guidance, and the Model 3 standard range will unfortunately lose access to the full credit as its battery pack is using battery cells built in China. However, Tesla's other cars will retain the full tax credit due to them using cells built in the US. Tesla sure knows how to incentivize its customers right into the arms of another country. OpenAI, the artificial intelligence company backed in part by Microsoft MSFT, said on Thursday that it had added support for third-party integration for Chat, its wildly popular generative AI chatbot. Chat took the world by storm late last year and has ushered in an era of increased focus and attention on the technology, with Microsoft MSFT announcing a multi-year investment into OpenAI and integrating the technology into several of its products. Microsoft MSFT has been competing with Google GOOGL in terms of AI supremacy. While OpenAI disabled the history feature on Chat earlier this week after some users reported seeing other users' conversations, OpenAI and Microsoft, 2 giants finally seeing eye to eye and working together in the age of AI. That should come as no surprise. The banking tensions that were so heavily influencing the markets were put to ease Tuesday as a Bloomberg report suggested that U.S. officials were looking into a temporary expansion of federal deposit insurance coverage to all bank deposits. This led to a surge in banking stocks, like First Republic Bank, KeyCorp, Truist Financial Bank, Comerica, and US Bancorp, among many others. Treasury Secretary Yellen's commented that their intervention was necessary to protect the broader U.S. banking system, and similar actions could be warranted, which bolstered market sentiment. It must be nice for banking stocks to catch a break for once. Investors in Facebook, Google, Snapchat, and Pinterest may be feeling heartened by the possibility of a potential U.S. ban on TikTok, as the social media app's 150 million active users have been a formidable competitor. Recent news of the Biden administration's threat to ban the app, combined with Chinese government opposition, has done little to quell the company's rising stock prices. However, analysts suggest that greater fortunes may still need to wait, as the technology export requirements and duration of any ban remain uncertain. A ban on TikTok may seem like a boon for its rivals, but investors may have to wait much longer for their good tidings. Baidu recently made a strategic investment in Shanghai-based RISC-V chip technology company Star5. The investment is seen as part of growing trend among Chinese tech giants to pour resources into the open-source technology. The companies have not disclosed the size of Baidu's investment, but have stated that Star5 has raised 1 billion yuan, $146.46 million. Chinese tech giants seem to be in an arms race to invest in technologies that are less susceptible to sanctions and restrictions imposed by the US. First Republic Bank has announced they will not be paying bonus to their executive officers in 2021. While Chewy's stock has fallen after earning report, Netflix shares have been rising as it led the streaming names, and Accenture plc shares rose 8% due to their forecast-beating report. Looks like bonus are only for executives at the top, and Netflix wins in the stock market again. Ford Motor announced a major strategic shift in February as they replaced their traditional single business reporting model with 3 new units. Ford Blue and Ford Pro will be responsible for gas and hybrid vehicles and commercial units respectively, while the focus on their electric vehicle division will align their finances to their ultimate goal of making 8% targeted margin on 600,000 vehicles by 2023. Ford continues to affirm their 2023 consolidated outlook with adjusted EBIT between $9 and $11 billion and estimated free cash flow of around $6 billion. Ford's aggressive electric vehicle timelines seem too good to be true. This is everything for now on the Wall Street wackiness. See you in another time.